Now, when it comes to eligibility for a 401k audit, I frequently hear kind of the general rule of thumb of 100 participants. But I've also heard of another rule, which is the 80-120 rule. Can you explain that a little bit?
Yeah, the 80-120 rule gives flexibility to those employers that bounce between 80 and 120 participants from year to year. So yes, the general rule is once you've hit 100 participants, you're required to do an audit. Not true with that 80-120. So if you have 101 participants, but last year you filed what's called a small form and you did not have an audit, you can elect to file the same 5,500 small form, small plan, and you can choose not to do the audit. So that provides a little bit of flexibility for employees that bounce between 80 and 120. So the first year that you'll need the audit is when you're over the 120, because
Okay.
when you're at 110, 115 or so, you've historically filed the small plan, have not had an audit. So you can look back to what you filed last year and file that same filing and continue to defer the audit. But for that first year audit, once you've hit 120, once you've exceeded 120 participants, then you can no longer defer the audit. You're required to have that audit.
Okay. So let's say I deferred the audit one year, I had 101 participants, and the next year I have 115 participants. Can I still defer it another year?
Correct, because the year before you still filed as a small plan. But
Okay.
once you've exceeded 120, you're out of luck.